Good day, everyone, and thanks for joining us here in the charts. You're tuned into the Market Beast edition. This is your fellow compadre speaking, of course. This is a very serious video. Do not skip this. I'm going to take a few moments of your time. If you are just joining us, welcome in. Hit the subscribe button. Leave an appropriate thumb. Engaging with us helps get this video out there. We need to get this video out. It's very important. It helps with the YouTube algorithm when you guys engage with us. Our loyal subscribers, welcome back. We're talking about the S&P 500. I've discovered some signs in the charts. Please don't skip this video, guys. Just a few moments. Let's not waste time, guys. We're going to talk about what we should expect leading into 2021. And let's not waste time. Let's dive right into the charts here, shall we? All right, so today's December the 29th, 2020. And the previous close of S&P 500 is going to be $3,727.05. It's down about 0.22% for the day. Okay. Guys, 365 days ago, we posted a video saying that the S&P 500 would experience a 30% move to the downside before the virus. I'm going to leave a link in the video right now so you can check that out. It's not as enthused as I am now, so be patient with me there. Just have time to listen. We nailed that call. Right now, what we're going to do is experience a few patterns that I've seen in the charts, and I want you guys to just have an open mind. Let's go ahead and reveal those patterns. That's it. Okay. We're going to get to this breaking news, stuff like that. Just ignore that for now. But let's get down here into back in I think it was 35. Okay. What we're going to be looking for is we're going to be looking for a specific candle. And I'm going to circle that for you here right now. Okay. So this green candle right here is the warning sign. Okay. That green candle, I think it's called a hanging man or a hammer or something like that. But they're all green candles. And what we're looking for is that candle to show up in the chart first within this shaded white area. Okay. And we're looking for a 30 up to like 70% move to the upside over the course of 6 months of, 1 year and a half of price action. These are actually 6-month candles. And after the price moves up about 30 to 70% to the upside, we're looking for the price to actually retrace back down to this green and pink area right here. So those are the three things we're looking for. This green candle right here that I've already circled, this just call it a hanging man. Price action going up to and topping out for about 1.5 years or 2 years. And then the price revisiting this green and pink area, rectangular area there. Hopefully you guys are with me on that. So there's three things that we're looking for. So we've already gone over that. Okay. This green candle right here is the warning sign. The price moves up. Let's go ahead and measure how far the price moved up. Let's just measure these three candles right here. And that's going to be about 75%. The only reason that I'm counting these three candles because this is the Great Depression. This is back in 1935. Okay. After the Great Depression, there was a very severe retracement in the market. If you can see that there. So that's the reason why I'm going to say that this 4 candles, see the price went up, 80% down. So these 4 candle setups is probably the reason why the markets took a little bit longer to move to the upside. But this, for argument's sake, let's just measure 3 candles because that's what we're comparing it to in our other examples. Let's move along here. So 74% up in 1.5 years time. Okay. The markets topped out and it retraced back to this green and pink area right down here. Okay, that's all we're looking for. It's basically below the wick of that green bearish candle that we've already discussed. Okay, this candle right here. Okay, let's move right along, guys, on the next example. We actually have 4 examples. Okay, so let's move through this very quickly. Okay, so here's the other example. Remember, we're starting with this bearish candle down here, this green candle right there. And then for 1.5 years, we're looking for bullish momentum in between 30 to 70% to the upside. All right, so these candles here is going to be 40% to the upside in this white shaded area. Okay, and of course the price topped out. And where did the price return to after it topped out? Went up and then boom. You can barely see it, but it actually wicked right within this green and pink area right here. So hopefully so far we're comparing apples to apples. We located a green candle. We located the price moving up and it topping out and returning back to this green and pink area. So far, hopefully we're on track comparing apples to apples. If I'm stretching the truth, guys, let me know in the comment section. I'm okay with being criticized. Constructive criticism, please. All right, so the same thing here. Green candle starting into this white shaded area. And again, 6-month candle. So we're looking for a year and a half of bullish price action. So let's measure from the bottom of that wick to the top of that wick. And we met the threshold, 30% up to 70%. And this is a 33% move to the upside. What happens to the price? After the price goes up for a year and a half, it collapsed, and this time it actually broke through that green and pink shaded area there. Okay, if you could see that. So far, we are comparing apples to apples, at least as far as what I can see. Although the price did break through this green and pink area, we're just simply looking for the price to return back to that level, whether it breaks through or not. Okay, let's stay on track and finish out on our last example, which is up here all the way up in, and this is like in the 1998. This is the last example. Same green candle. You can see it right there on the screen there, guys. The same green bearish candle. Excuse me. And the price actually had experienced a bullish momentum to the upside for a year and a half. Okay. And this one totaled about 60% to the upside. And of course, I don't have to explain it. I think you can see it pretty clear on the screen there. The price topped out, and then it returned back down to this green and pink shaded area. Now, why am I going over all this, one may ask? Well, the main thing that I am focusing on, wait, when we have, well, no, so sorry, let's stay on track here. The main thing that I am paying attention to is the warning sign, the green candle. This candle does not lie. Whenever you see this candle, I don't care if it's on like a higher time frame. Let's just say the monthly or the 3-month. We're looking at the 6-month candles. Obviously, if it's a 6-month candle, that means it's really probably going to get really nasty. So if we go higher in the time frames and we see this candle, we should probably get really concerned. Well, not get really concerned. I'm not trying to spark any fear, but what I'm going to reveal to you guys right now, I'm going to pull up the 12-month candles. And I want you guys to have an open mind. I know the critics are going to say, dude, you just had the 6-month candle. This is the 12-month candle. It is different, okay? Let's compare apples to apples. But the candlesticks don't lie, guys. The candlesticks tell a story. And what you are looking at, ladies and gentlemen, is a 12-month candle in comparison to the green candle that we've been comparing that began in these patterns in the white shaded area. And this is what you're looking at from a 12-month scale. Guys, there has never been a candle of this size ever in the history of mankind. We can go back briefly here and you can look. There's never been a hammer candle or, hanging man candle of this magnitude ever in the history, dated all the way back to the 1800s. And I'm bringing all of this to your attention is because let's think about the psychology of this candle, okay? As far as what I can comprehend, when I see a candle like this tells me that, something's not right. Let's do something like now. Things are getting bad. Let's just kind of keep it going for a while. And then at some point in the future, we'll just kind of return back to the lows of this wick. Because we've already shown you guys what happens when we see a candle like this in the chart. The price continues the momentum to the upside. And of course, when it's finished with the, exhausted and the bullish momentum to the upside, the price eventually corrects back to and possibly through this green and pink rectangular area. Guys, they can't fool me, so to speak, okay? This candle is a bearish candle. This isn't the alarming sign that I'm paying attention to. I'm not trying to create any fear, and I'm pretty sure people are probably like, dude, you're just delusional. Just cut it out. Stop smoking whatever you're smoking, dude. Cut it out. That's fine, okay? I'll be that. But this is not a good sign, guys, to me. This leads me to believe that we're probably going to experience some bullish momentum. That's fine. The price will probably continue up. I do have bullish targets. This breaking news level is what I'm going to start calling my price targets. Is going to be at about 4,600. 4,600 is the lower white line there, and about $4,800. Those are my bullish targets leading into 2021. I don't think it'll take long. Maybe it'll take longer to reach that level. Maybe it won't. We have to wait until the price action determines how long it's going to take. But what I will say is, when it's all said and done, guys, and the markets are finished, this I think I calculated 54,469-year-old bull is ready to roll over. It's not going to be pretty, guys. I mean, the average person may not be able to stomach this drop in the markets, guys, okay? Because I'm going to tell you right now, the markets are likely going to break through this level down here. If I haven't already mentioned it, it's at about $2,100, okay? And again, I don't know how high the market's going to get. Let's just say it does reach the top of this line here at about $4,800. I'll go ahead and measure that drop for you guys. And I'm going to tell you this right now. We'll be lucky if we only experience a 40% drop in the markets. And I don't know, let's just say in a 365 span, just like that. We'll be lucky if we only experience a 40% drop in the markets. And I don't know how long this would take, guys, but you just seen what I showed you in the charts. When this candle is presented on the charts, this is an alarming sign that the markets will likely correct back to the lower wick, back to this green rectangular area. Let's wait for the markets to decide how long it's going to take. I've never shared this with anyone in terms of when I think the market is going to top out, and I could be wrong about this, but I actually did some technical data, and my end game date is actually sometime in August the 20th something, I don't remember. August the 20th something, 2022. That's my end game date. I hope I'm wrong about all of this stuff, guys. I hope I'm just kind of, delusional about this whole thing. But you know what? No, I'm not convinced, guys. This is an alarming candle right here. And you guys can let me know down in the comment section. What do you think? Am I just losing it? I'm okay with losing it. That's fine. Maybe you're right. But I truly think that we all just need to be prepared for anything to play out in these markets. Protect your portfolios, guys. Protect yourselves. This leads me to believe that this is probably going to be every man for himself. Okay. If you guys do not understand volatility in the markets and you do not know how to protect or diversify or hedge your position, that's something that you should probably start reading and understanding now. Okay, because leading into 2021, we may experience a lot of bullish momentum. Okay, we may experience the most disgusting dump off in the history of mankind. Just be prepared for anything in these markets, guys. Do not let your guard down. Do not let anyone tell you that everything's fine and that we're going to the moon. Maybe they're right here in the short term, but again, be prepared, guys. Let's end this. I feel like I'm going in circles here. I appreciate your time, guys. Leave an appropriate thumb if you enjoyed the content. Leave a comment down below. Let me know what you guys think is going to happen in the market leading into 2021, 2022. I really appreciate every single one of you guys. I really, really do. Thank you for joining me here. I'm going to cut out here, guys. Protect your portfolios. Take care of yourselves. We're going to talk very soon, guys. And bye for now.